Hello, this is Seewing Yee, and my co-host is Mr. Richard Advani from Guaranteed Rate Mortgage. Richard has done thousands of loans for real estate investors all over the U.S. He has real knowledge around what's going on in the housing market. Welcome, Richard. What I've seen, especially in the past 1 year, a lot of real estate investors, newbies out there, and even the so-called experienced investors who have purchased one or two rentals in the past deals, a lot of them are still staying on the sidelines for these reasons. Oh, I'm waiting for the mortgage rate to come down to 3%. I'm waiting for the real estate crash to occur 50 to 60%. I'm waiting for the foreclosure rate to come into the market so I can pay pennies on a dollar. I'm going to wait until the recession is over. I'm going to wait until the inflation goes back down to 2%. I'm waiting for all the negative headline news to totally disappear before I get off the sidelines. So
That's great. What's going to totally disappear with that? All the money you have sitting in your bank account being scared. Scared money doesn't make money. And it's the truth because look, I mean, man, it's crazy. I've been going grocery shopping with my wife now since we have a newborn, and typically I haven't done that in years. And now I'm becoming more aware of what it costs it is almost cheaper these days to eat out than almost even cook at home. You go and buy groceries for three people, two people a day for a week, and you're spending $300, $400, $500. It makes it hard to sustain yourself, but that points even more at the negative power of inflation, right? Cost double to buy bread, triple to buy everything these days. Guess what? That means your dollar, that $1 is probably 50% less effective than it was 3 years ago, 4 years ago, right? Whatever. If they're saying it's 12% a year, okay, that's 3 years of it. That's 50%. We all know how high it really is, right? So imagine that. Look at the price of cars, right? Jeep Wranglers go for 60 grand, 70 grand now. Those were $30,000 cars 8 years ago. Once again, the power of that dollar is half as effective. So if you're sitting on the sidelines for all those reasons, and we'll run through them, but you're fooling yourself. And also, more importantly, talk about Warren Buffett, talk about Ray Dalio, right? You don't sit on the sidelines and wait because you miss out on all the market action. How many people in 2013, 14 are like, oh, 7-year cycle, real estate cycle, I'm not going to buy. Values have gone up 100% since then. And look, at the end of the day, I always say this: real estate right now, the real estate surge and where we are is based on supply and demand. And the supply and demand is not fixed. Feds can increase rates, all this other stuff can happen. But at the end of the day, if there's more buyers for product, or there's product available, that is going to drive prices. And guess what? That problem is not being fixed for at least the next decade, even if they started building up new homes today, which they're not. Yeah. Rates aren't going to go back to where they were. The 2.5% 30-year fixed, or the 3%, or probably even the 4% are far into the future, right? If we ever see it, which I don't think we will. The general consensus is the new normal after rates come down sharply are going to be in the 5s. Right now we're in the 7s. The 3s and 4s are not even out of question. It's unfortunately, let's chalk that up to be an anomaly, right? And it was amazing for all of us that do have interest rates that low. That's not coming. And the 50, 60% crash, everyone thought that was what COVID was going to do to real estate, right? Everyone who knew I owned a bunch of real estate, friends were like, oh yeah, how is it going? Are you worried? What's happening? And nothing happened except rents doubled and property values went up 35% in a year and a half. Get away from the fear mongering. If you're new to real estate, or if you're seasoned, right? It's just like any investment, dollar cost average. If you're worried about the market, doesn't mean don't buy anything. If you have the funds to buy 6 rental homes, okay. Look, I agree. Things are volatile. Don't go buy 6 tomorrow. Buy 1 tomorrow. Buy 1 4 months later. Buy another 4 months after that, or 2, whatever the number is. And you dollar cost average, right? You buy it at different cycles, different waves in that cycle. And look, maybe worst case scenario, right? Maybe you buy a property tomorrow, 3 months from now, property values do go down. Something dramatic happens, right? Guess what? Buy another one then. That's great. Even better deal than the first deal. And you bought that first one because the numbers did make sense, right? Regardless of all the external noise. You buy another one. And then maybe 3 months after that, values go up again, right? So at that point, you're like, damn, they went up, right? Your whole mindset changes. You want them to go down so you can buy more and get even in better deals, right? But if you're looking at real estate long term, which you should be looking at it long term because that's where you build wealth. If you're looking at 10 years, who cares if value drops in a year or 2 years? Because they're going to come back up, right? We know that. And if you're not looking to sell, it doesn't matter what some guy says your house is worth on a piece of paper, right? It doesn't matter what's happening in the economy. None of that matters. If you're getting rented, covering the mortgage, so many people sold their homes and short sale and foreclosed in 2007, 2008. And 3 years later, values were right back up there. Except now they were carrying a big L because they had a big foreclosure on their credit and missed out on all the opportunities that arose. Definitely don't believe the headlines. If you're waiting for any of the good reasons, Seewing mentioned, as you always say, buy real estate and wait. Don't wait to buy real estate, and do it intelligently, do it calculated. But at the end of the day, you don't want to have money in the bank, right? Stock market's nuts. Okay. Maybe you guys, I have money in stocks too. Maybe you guys are more comfortable with it, but I can look tangible real estate, right? That it brings in an income too. A lot of people invest speculatively on stocks to buy and sell versus dividends themselves. But I don't understand how you could invest anything more better than real estate. It's tangible. It's real, right? It's not an E-Trade account. It's not all these other, investments that are going haywire right now, right? Now, yeah, in real estate, rates have gone haywire and that does affect our bottom line. But if you look at the overall trajectory of real estate in the last 12 to 15 years, it's only been going one place and it's only continuing to go one place. Are we going to see 25% appreciation or 15% appreciation or even 10% appreciation in the next couple of years? Probably not. We'll see probably half of that. Things will start to maybe level out a little bit, but they are going to keep going up. It's once again, supply and demand. If you have 60 grand to your name total, you have no other money. When I say go dump all 60 grand in real estate, no. Dumping half of that, at least in that example, you're losing money not doing anything. It's so unprecedented where we are right now. When you're like, oh, I need to protect this 60 grand. And inherently we're like, let's keep it in the bank. That's the worst thing you can do because you're not protecting it. You're literally just hanging, throwing it out the window. Protecting it is putting it in some inflation hedging investments. Real estate, 30-year fix, nothing better to hedge against inflation. You want to go buy some gold bars and stuff, do that. But I think having a comfortable reserve is very important. Don't get me wrong, but excess cash waiting for the right time to invest is wasted money.
Absolutely, Richard. Let me ask something. Now, investors are waiting on the sidelines. They're foregoing the multi-dimensional assets of a real estate asset class, 1 to 4 units. Into property, give you cash flow, great tax benefits, appreciation potential long term, and the power of the 30-year mortgage. So if you wait on the sideline, you're not going to be rewarded on these multi aspects of holding a property. So people need to think about that. So what's your thought on that? Is that missing out on the totality of multiple ways to make money on a real estate asset class, single family home to 4 units by waiting the sideline, and then you're also foregoing this opportunity loss and opportunity cost. So what are your quick thoughts on that?
Yeah, just that, right? There's so many facets to real estate wealth, and most of it's not what people think, right? Everyone's just after the front end, their cash flow, their ROI. And those of us that are seasoned and owned real estate for a while know that's not what's making us wealthy, right? Okay, even if you can get your 7% cash on cash, whatever it is, what is that? It's a couple $100 a month, best case. Is that going to make you rich? Okay, get 5 of those. It's $1,000 a month, right? Is that going to change your life overnight? No, it's not. Power of real estate is compounded the longer you own it, right? And what I mean by that is not only do you have the cash flow, which is as you move through longer in real estate, that becomes more significant, but initially that's the least significant part, right? So you have cash flow, you have your inflation hedge, you have a return on amortization that you're paying down the loan. You have depreciation, right? So you're able to write off that actual 8%, 7% cash on cash return you're making. Now you're able to write all that off, right? So you save some tax benefits, which really pushes that return up from that 7-8%. But then in addition to that, the real wealth building comes from inflation and the inflation hedge. Properties I bought 10 years ago at new construction that were making $200 a month at the time, $200 a month based on that property rent was about a 7% cash on cash, right? So what is $200 a month doing for me? Nothing, right? But those same properties today, under 10 years later, I think it's 7, 8 years on a bunch of them, the rent's gone from $13.95 to $17.95, right? So what happened to my cash flow? I don't need rents to double for my cash flow to double, right? Cash flow rents went up $400, but all that 400 increase went to my bottom line. So that means my cash flow at 7% ROI went from $200 a month to $600 a month, right? My cash flow tripled. Now the property's making me 20%. Now, 8 years later, I'm like, okay, this is actually real money, right? That's 600 a month times 10 properties, $6,000 a month times 20 properties. That's 12 grand a month. Okay. This is turning into real money. And I'm only 7 to 8 years in, right? Once you're 15, 20 years in, that cash flow dollar number increases, right? With inflation once again. Maybe I'll be making $1,200 a month cash flow per property. Yeah, there's so many different compounding effects of it. And then you throw the cherry on top is 20 years in, you're making all this cash flow. Well, 10 years later, your loans are paid off, right? Then you're ready to retire. Now, 10 doors, 20 doors times 18, $2,000 a month, right? You're bringing in 30, 40 grand a month cash flow. And you don't need to do anything crazy to accomplish what I'm saying, right? Look, and most people listening to this, you make a decent amount of money, right? You probably potentially work for a tech company. You may have RSUs. If you dump 60 to 150 grand a year, buy 1 to 2 properties a year for the next 10 years, you're set on that path, right? You can get aggressive as you want, depending on your exact situation. But I always say, people ask me what my biggest regret was and is with real estate, investing in real estate over the last 15 years. And honestly, it's not buying more and not eating cup of noodles if I have to every day and sleeping on the floor to buy more real estate, right? And I'm sure everyone shares that sentiment. But the house you bought 12 years ago, you're like, man, I should have bought 2 of them or 3 of them. I should have figured out no matter what, how to buy more. Could you imagine the wealth that would have created, right? Think of your primary homes, most of you out there. Imagine it. And a lot of us may have had that ability somehow to pull money together and buy another house in the neighborhood that would create lots of wealth. And I actually did that. I have 3 homes in my neighborhood, 2 of them I Airbnb, 1 of them I live in. But it was under that same kind of logic and rationale is I need to pull means together from wherever I can to get as much as I can, because I realize that this rate environment and the price environment and being on the ground level, seeing the supply and demand issue. And that's not an issue that can be solved overnight. So getting away from the noise and the articles and the news and the rates, and this and that, Fed, and looking straight at supply and demand, right? There's 20 people that want to buy lollipops. I only got 5 to sell. Guess what? I'm going to sell lollipops at $2 a piece. But if I have 5 people wanting to buy my 20 lollipops, I'm going to sell them probably a little cheaper because I need to get rid of these lollipops. Guess what, guys? There's millions of us trying to buy homes and this many available. And that, once again, is not going to, the lollipop factory's broken for the next 10 years. And there's always going to be more buyers for my lollipops than lollipops I have. What's going to happen? Price of lollipops are going to stay pretty high, right? Yeah, there's so many factors, but it's funny because most people just get stuck on that first factor, right? What is my cash flow up front. How much you making? And I ask you to those people, what is your cash flow with your money in your bank account? How much are you making? Zero. Easy to beat that.
Great recap. Thank you so much, Richard Advani from Guarantee Rate Mortgage. Thank you so much, everyone, for watching. This is Seewing Yee. Have a nice day, and we will see you on the other side. Goodbye.